Welcome to Quantum Finance. My name is Parker, and this is our end of week recap for the week ending September 29th. So in this video, we'll take a look at our charts, and then we'll go over some news and data from this previous week, and then we can look at the economic calendar for next week. So starting here with the S&P 500 SPY ETF, another red week here, continuing the pullback here in the market. As you can see, we did get a pretty good wick to the downside here, getting really close to this lower extreme on our weekly chart. If you do turn to the daily, as you can see, bottoming out here on Wednesday, getting a nice recovery bounce on Thursday. Big gap up this morning, actually, and then we just had a sell-off all day today. This might be a short-term bottom here in the market. When this next weekly candle does open, this lower extreme will move up, probably pretty close to this low here. So I would maybe expect this to be a low coming in, but if you do remember last week's video, I did say we did have room down to that 415, to 420 level, and we did not quite get down there yet. So we could still have more downside, but this week here with this wick could be a short-term bottom. Turning to the debt market with the U.S. 10-year yield, big green week here in the U.S. 10-year yield, continuing its breakout to the upside, hitting a high this week of 4.688. Just a huge move here in the 10-year yield. This is another reason why the stock market is continuing to pull back. Big green week here in the dollar, breaking a significant high here from March. Just really pushing up here, hitting a high of 106.83. I would expect a pullback in the dollar, but I have been saying that for the past couple of videos. But as you see, we do have a pretty big wick here on the dollar as well, with a big red candle coming in yesterday. So maybe we can get a a bearish reversal coming in for the dollar next week, and hopefully get a bounce in the stock market. Turning to cryptocurrencies with Bitcoin, we do have a green week here in Bitcoin, getting really close to that bullish reversal that we have been looking for. If you look here at the daily chart, as you can see, still downtrending here, but we are looking for a squeeze to the upside, closing above this downtrend line, which does line up here on our weekly chart with that midline. So looking for hopefully a strong weekend here in Bitcoin to get above our midline and get a nice bullish reversal to start moving our way back up here towards this 30,000 mark. Turning to XRP, green week here in XRP, getting a nice bounce today. As you can see, squeezing to the upside, breaking above these highs from last week and pushing up into the structured resistance here from the end of August. As you can see, currently sitting right there at our weekly midline. So it would be nice to see a close this week here above that midline. Hopefully getting a nice push up here and closing above, this kind of 55-cent level, because as you can see, we have this significant resistance here, here, and here. So any close above, I'd say like 55 cents for the week would be super bullish here on XRP. Turning to commodities, we have oil. Pretty volatile week here in oil. Currently still green. As you can see, huge move to the upside on Wednesday and Thursday, topping out on Thursday at $94.99. So basically $95 here on oil before getting a pullback. Really kind of breaking through these major resistance levels back here from November and October. So I would probably expected there to be a lot of selling up here into this resistance level. That's what we were talking about, for the past couple of weeks, this kind of $92 to $95 target. As you can see, there is a large wick here on the weekly chart. So I would maybe expect a pullback coming for oil next week. Turning to gold, monster red week here in gold. Biggest red week I've seen in gold in quite a while. As you can see, getting rejected here off this weekly midline, breaking down through these lows back here from August and really pushing down through that lower extreme, coming down in for a retest of these previous lows back here from February. As you can see here, really breaking down and selling off here on Tuesday and just continuing all week into today. Turning to silver, big red week here in silver as well. As you can see, kind of breaking down through that lower trend line support that we drew last week. Really pushing down here into this lower extreme, but still sitting right down here at these lows from June. Hasn't quite broke down yet. Silver is a lot relatively stronger than gold at the moment. So big dump here in precious metals this week. So now we can look at some news and charts from this week. So here we have a chart showing that global bond yields have increased at the fastest pace in history. We also have a chart here showing the pending home sales in the U.S. have moved down to the lowest level since April of 2020, a month where much of the U.S. economy was shut down. The housing market is still frozen. Here we have a chart showing the U.S. housing market affordability is by far at its lowest point in history. Even in the worst part of the 2008 financial crisis, affordability was 15% better than at its current levels. With the recent move higher in Treasury yields, we should see 8% mortgages within a week or so, which would also mean that the median home payment will soon cross $3,000 for the first time ever. Homebuyers are now spending 50% of median pre-tax household income on house payments. Buying a house is now a luxury. We also had the Bank of Japan announcing an emergency bond operation proposing to purchase 300 billion yen or $2 billion of bonds with maturities 5 to 10 years out. We also have the SEC delaying a BlackRock spot Bitcoin ETF once again. We also had the stock market this week run into the extreme fear levels. As you can see, this is the first time we've hit this level since March 15th. We also have the U.S. small caps relative to the S&P 500 dropping to levels unseen since October of 2002. This is a chart showing the price of orange juice futures continuing to soar here as the orange juice squeeze continues to go parabolic. Here we have the last 4 Septembers for the S&P 500. As you can see, all negative for the past couple of years. But the last 3 Q4s have been all positive with pretty big gains. So hopefully we do see that kind of trend continue going into the fourth quarter of this year. Here we have a chart showing that Russia and OPEC are now cutting a massive 4 million barrels per day of crude oil production. This is the highest level of production cuts outside of recessions over the last 2 decades. As Saudi Arabia and Russia extend production cuts of 1.3 million barrels per day, supply is going to remain limited for a while. OPEC has proven multiple times over the last 3 years that they are committed to higher oil prices. And this is a chart showing the bond tracking ETF, the TLT. It did just close at its lowest levels this week since February of 2011. The ETF is now officially down 50% from its high just 3 years ago in 2020. Despite volatility returning, bonds are getting crushed with some of the worst selling pressure in history. Higher rates and recorded levels of deficit spending have destroyed bonds. Bonds are no longer the safety trade. So now we can look at the economic calendar for next week. So Monday, October 2nd, we get manufacturing PMI and manufacturing prices. We also get the Fed chair speaking. Tuesday, we get job openings. Wednesday, we get non-farm employment change, global services PMI, non-manufacturing PMI, non-manufacturing prices, crude oil inventories. Thursday, we get initial jobs claims. And Friday, we get average hourly earnings, non-farm payrolls, and the unemployment rate. So yeah, pretty wild week this week. But yeah, that should do it for the video. Appreciate y'all watching, and I will talk to y'all later.